growth stage companies to access capital. So that is what we do. I have been in the financial and investment space for over 15 years. And I believe that based on my experience and based on the learnings from the work that we do at the deal flow facility, I will be in position to share with you what we think investors are looking for and what some of the challenges are. I would like for this to be an interactive session. So I will ask the team at Tech Lab to just monitor the chat, the chat box. If anyone has questions, comments, or you have any reactions, kindly put that into the chat group, and I'll ask us to respect the chat group so that we can have so that we can be able to pick out the questions. Thank you. And yeah, I look forward to the discussion. So should I start now or should I?
Yeah, sure. You can go ahead and
Kenneth?
start, Brenda.
Okay. So thank you so much. I think that there are two main things that that I have been tasked to talk about today. The first one being what investors are looking for, and the second one being what challenges they are to accessing private capital in Uganda. And like the former or the previous presenter said, there's value in supporting startups to grow for various reasons, but most importantly, beyond just improving the economy, the impact around supporting startups. He talked about in South Africa, startups offering employment opportunities to the youth, improving livelihoods. So there is really value in us supporting startups. A lot has been done in the Uganda ecosystem to support startups. There are so many programs, whether they are government-led programs or they are private sector-led discussions like the ones we are having today, or they are donor or development organization programs like the one that I work for. Like there's so much being done to support, startups in the ecosystem. Now, why alternative financing or why private capital? So most times, banks are a good source of financing, and we do not discourage anyone from accessing credit from the banks. However, what we've seen in the market is that most businesses get they are not okay. There are so many reasons why banks will not, lend to you. One, for example, you're in the agri sector, it's perceived to be risky, right? Or your startup is in the agri value chain. You have issues around seasonality, you have issues around collateral, you have issues around offering long-term solutions. So most times for different sizes of businesses, banks will offer you short-term credit. So that's where alternative financing comes in. Alternative financing is able to give you long-term patient capital, but even beyond that, you're able to get the value of having more strategic partnerships. These days, we notice a trend of investors and entrepreneurs or businesses beyond the money, they are looking for strategic partnerships. Are you able to unlock markets for me? Are you able to for example, if I'm in the tech business, are you able to link me to more skilled people? Are you able to link me to someone who can, for example, support me with things around licensing, things around intellectual property? So people are beginning to think beyond money, which is a step in the right direction. And that is something that you may not easily get from a bank. What you'll get from alternative financing is that you're partnering with someone who is so hungry for a return from you that they are willing to invest more into your business. They are willing to advise you. They are willing to guide you. They are willing to hold your hand and walk this journey with you. So that is the beauty that we see with alternative financing. Now, what do investors look for? Of course, within all, you'll ask me what are the instruments for alternative financing, and this could be a private debt or private equity and anything in between, blended finance, right? There are so many innovative financing options that have come up now. So when these investors come to you, what are they looking for? right? There are so many sources of, there are so many types of private capital investors. They could be funds, they could be high net worth individuals, they could be angel investors, they could be your family and friends, they could be like pension funds, or we see development banks also going into this. There could be governments, for example, like the US, the EU, or Asia having a development arm. There could be companies. We've seen banks. I know like Stanchart has an investment arm, right? So there's the realization that there has to be more work done on the alternative side. So those could be some of the sources. So then the question is, what are they looking for? If an investor comes to you as a business person, what do you think they are looking for? And the short answer to this is they are looking for returns, because they are it's not an a for-profit organization, right? So they are looking for returns, but these returns can take a form of two things in my view. The first is financial return, because they are putting money in your business, they are hoping to get money back, right? The second is they are looking for impact. We are seeing a rise of so many impact investors. So many of these big international companies, for example, or governments or high net worth individuals, like I mentioned, are looking to create, so this is like their corporate social responsibility arm. They are looking to create impact, right, in different areas. They have different mandates. So impact could take the form of, for example, they want to improve livelihoods. They are pushing for financial inclusion. They are looking to promote women. They are looking to promote youth. They are looking to protect the environment. So there are so many impact angles that they may be looking at. So what we've seen now is the rise of impact investors, right? So you find that the returns, like I mentioned earlier, then will take the form of one, financial return, and two, impact. So you could get investors that are really only looking at financial return. They don't care about the impact. And then there are those who are looking for both. Or there are those who are looking for impact, and the financial return is secondary. But what is very common, or what the common multiple is that there has to be a return. So that is what investors are looking for, right? And now, when they identify you as a business and say, okay, this is a business that I could invest in. This is a sector that I'm looking at. I'm looking to invest in a tech company and things like that. So beyond just the money, there are also investors who are looking to there are so many investors who are looking to be market leaders, especially in the tech sector. For example, if there's a solution and they know that this is a unique solution and this is something that is going to really change lives, then they are looking to be a part of that solution because it's going to be the next best thing, right? So different investors look for different things, but the common multiple is a return. It's either financial or it's an impact return. So as a business, right, what are they looking for if they've said, okay, we are going to invest in a business X? How should that business be prepared? What should be working well for you, for the investor to have interest in your business? Now, there are so many things that they will look at, but I'll just mention the ones that I think are very common across different investors that we've worked with. So the most important one is the product market fit, right? Which eventually translates into scalability. Remember, we mentioned investors are looking for a return. So they are looking at the product or service that you're offering, and the product or service that you're offering, and the solution that you're trying to create, because the solution is then your business. So is it scalable? Does it fit? Right? Yesterday, I was listening to a video that someone sent me about um, a business that closed in Kenya, where someone decided that it seems Kenyans do not have access to good street traditional food. And what they had not put into consideration is that is actually not a problem. That was a problem for them, but for the real Kenyan, for whom this solution was being made, it was really not a problem because they can access food. They have chapati on the streets. They have nyama choma. Like, it's not. Kenyans don't really struggle to access food, but this person had come into Kenya and decided that that is the problem. And this particular company closed after 9 months because there's no product solution fit. There's no scalability. So what product are you offering or service? Because it can also be a service. And is it scalable? So with scalability, we are looking at market. Is there a market for it? Right? I could design a solution. I could say, for example, that you know what, I live in Chira, so I'll, for example, say that in that I think that people of Chira, because me as Brenda, I probably struggle to get coffee along the way. Then I decide I think everyone really must struggle to access good coffee along the way, and then I open a coffee shop, right? Is it a bad business? No. But is there a market for it? Maybe not. Right now, there's a lot of road construction. Shops along that road are closing. The population there may not be the kind that actually eats out. Coffee may not be their problem. So have you looked at your product and solution to see that it's scalable? If I moved it from one area to the other, will there be buy-in? And also within your area, how many people are actually going to buy into that product, or how many people are going to use that service? So that product solution fit is really important for every business person to basically you need to take a step back and analyze the product or solution that you're putting out there and say, is this something that can scale? Because as an investor, remember we said investors are giving you long-term capital. There are those that, of course, will give you short term, but then think about it and say, an investor will think about it and say, in the next 2 years, will I still be getting value from this business? Will this business still be valuable? It's like now deciding you want to produce CDs. People don't use CDs anymore. We have Apple Music, I have YouTube, I have music on my phone. So then you're thinking, who will use that particular product? So that is the lens with which investors look at your products and solutions. Of course, that also, like I mentioned earlier, translates into the market. Is the market receptive? Who are you targeting? If it's an impact investor, they are thinking, okay, what is the impact of this solution to the environment? For example, is it improving livelihoods? Are you working with smallholder farmers? Will they go? Are you building capacity of the youth? Are you hiring women? So there are all those things that they look at. The other thing that's very important is the financial health of your company. And to and financial health of the company for a startup, right, starts from the point of being able to keep data, track it and store it. Because when you're starting up, normally things get lost in translation. It's not easy running a startup. It's not easy running a business. So sometimes things get mixed up, monies get mixed up, resources get mixed up, but it's very important to keep records, because when you keep records, then you can know, okay, you're able to track your expenses, you're able to track your income, you're able to basically have a clear understanding of what the financial position of your company is. But you cannot do that if you don't have records. For example, if you don't know, if you don't have records on, for example, your acquiring stock or inventory, or you're making payments, or you have credit terms here and there. So they need to know the health of your company, because remember, they are coming to you to make a return. So how do you make a return from a company that does not know what their sales are in a certain period? How do you make a return from a company that does not track its expenses? How do you make a return from a company that does not audit its financials? Because auditing financials is like a validation of the work that you do as a business. It's a validation of your income. It's a validation of what your balance sheet is like. So without that, then how do you expect me to invest in your business? Even if you go to the bank would want to know, what is your cash flow like? Right? How much money comes into your company? How much goes out? And then based on that, they are able to assess and say, okay, depending on your cash flows, maybe you are worth this much, right? So what is the financial health of your company? right? That's the second or third if you add in the market aspect. The other thing that they look at is the management of the company. You as the founder of the business, or you as the entrepreneur who is running the business. What kind of business person are you? What is your management team doing? Are you in a startup, for example, a health or a startup that is providing services or products to the health sector, and you have no medical person or anyone who has studied anything health related on your team, then how do you know what you're doing? Right? You're running a fintech, but there's no one on the team that is tech savvy or has certifications in technology and things like that. So what kind of team do you have on ground? Because what that does is it gives the investor assurance that, you know what, my money is safe. My money is with people that understand the business. My money is with people that are passionate about the business. My money is with people that are hungry to grow the business. So they are looking at the management team, and they will definitely assess your management team they will comb through to see what kind of people you are. They'll look at your corporate governance structures. Is you and you know, these are things that sometimes are hard to speak about, because the reality is when you're starting a business, most times you don't have the money to hire, right? Hire, and those are some of the challenges that we see in the market. Sometimes you do not have the money, for example, to hire people at a certain level, because like the name says, you're starting up. So you find you're the entrepreneur, you're the HR person, you're the MD, you're the salesperson, and that is normal. That's how all businesses start up. But then at a certain point, there has to be signs of you trying to streamline your business. This can't go on for like 2 years. In the third year, what are you doing? Have you hired an operations person? Have you hired an administrator? Do you have a CFO? And sometimes people think that right now we have even CFOs for hire. You really don't have to have a CFO every month, because then it becomes costly. We've seen people hire, for example, accounting officers, and then hire a CFO, for example, for a week to come sit and put the house in order, support with, for example, their audits and things like that. So there are very innovative solutions that have come up around resourcing, right? That SMEs or startups can take advantage of. So your management is very important. It is very, very important. The other thing that they look at are the different risks in the market. For example, what are the regulatory, what is the regulation or the regulatory environment in which you operate? Is it volatile or is it stable? They will look at the different market risks, right? They will look at, for example, if you're bringing in some of these products or importing some of your raw materials, what are the issues? What are the foreign exchange risks that are involved? Right? They are looking at the regulatory risk. Will the government wake up tomorrow and change something? Will there be a ban? Will there be a ban on you importing things? Will there be a ban on you exporting things? How is the market operating? So they are basically trying to see how they are trying to assess the chances of your business surviving in the market in which it's operating. Sometimes some of those things are beyond you, right? Because as an individual business, the regulatory changes really can't be in your control. But unfortunately, those are some of the things that they look at. But then also those things are looked at with consideration, because like I mentioned, some of those things are really beyond you. The other thing that I needed to speak about is then the impact angle, right? What are you doing? With the rise of so many impact investors coming into the market or operating globally, what are you changing? Are you employing youth? Are you employing women? Right? Are you changing livelihoods? Or is it just profit, profit, profit for you? And you know, this is a very contentious issue, because someone will say, I'm starting my business and I need to make money. I'm not going to be handing out money. And it's something that it's a conversation that we always have. But then beyond that, what are you doing in your community? If you're in the agri sector, for example, how are you working with the women in the community? Are you employing them, the youth? So as a startup, you may not employ 50 people, but are you impacting the 5 or 10 people? And is there a potential for the 10 people? If I invest in your business, will those 10 people become 100? Will those 100 people, when I give you additional funding, become 1,000? So it's not cast in stone that the impact number has to be a very big number in thousands, but there has to be how the impact has to show, so that even if I have an impact mind and I invest in your business, then I know, okay, I'm investing in this business, I will get a return, but I also know the money that I'm giving you is going to help you reach 200 more farmers. So that is the impact angle that they are looking at. So if you ask me, those are the key issues that I feel investors look for. And the other thing that also comes to mind is the uniqueness of your solution, right? Most times investors, and this is why people will say, okay, but we see investors only being excited about technology, because investors are looking for disruptive solutions that will be a market leader. Because when it's a disruptive solution, then you're sure of a return. You'll examples are things like Uber, for example, things like Airbnb, things like, let me say, when Jumia came into the market, or when like the likes of Safe Border came into the market. So it's solutions that are very disruptive. Of course, there are two types of investors. There are investors that invest in safe businesses because they are like, you know what, me, I'm going to go with what I know, which is agri, or I'm going to go with a manufacturing business because the business model makes sense for me. And then there are those investors who are also looking for disruption, especially the ones in technology. In other parts of the world, you'll find investors investing in, for example, a tech idea, right? Unfortunately for us in Uganda, because we are perceived to be high risk, that may be difficult. But in like the US or Asia or whatever, you find, someone comes up with an idea, thinks it through, puts it on paper and says, you know what, if you invest in my business, give me 2 years to implement this idea, and then I will give you this much return. And because it's disruptive, it's exciting, investors will definitely want to go to that. Not so much in our market because Africa is perceived in a certain way. So we've not seen so many of those disruptions. They kind of first need you to prove the concept and work at it for like a period of time, which is very expensive as well, before they can sink money into your business. So if you ask me, those are some of the areas that I feel what investors are looking for in this market. I know before I move on to the next thing, I will pause it there for us to get some questions, 2 or 3 questions, reactions, and then we'll go to the next bit.
Thank you. Thank you very much, Brenda. Unfortunately, I have not seen yet a question on the chat. Is there anyone who has a question before Brenda continues? You can feel free to raise up your hand, and you can then be invited to ask your question. Anyone with a question? Any questions? Okay, as maybe we get 1 or 2, 3 questions. Brenda, to you, I would want to request you maybe to briefly unpack what a startup is in this case for the audience to very well differentiate between a startup and maybe an MSME or an SME. But colleagues out there, you are free to ask or put your questions on the chat or raise up your hand. I will then ask you to ask your question. Thank you. Over to you, Brenda.
Okay, sorry, I was speaking. I didn't realize that I was on mute. So it's a very interesting question. I mean, for some It's like the debate that goes around what an SME is, right? What is a small business? What is a medium-sized business? It really varies. But if you ask me, generally, I would say that startups are 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 small are businesses that are literally just getting off the ground. So they are past ideation and they are now going into actual, you've ideated your idea, your product, your service, so it's a solution in the tech space. You're past the ideation phase and now you are starting to implement or to execute or to build this idea that you've had. So that is what I would call a startup. It's a startup could apply to all sectors, but most times when people talk of startups, most people think and relate it to technology. But generally, a startup is a business that has gone beyond ideation and is now being built. That idea is being put out there. For example, I'll say I have an idea around collecting. Maybe my idea is around enabling parents pay fees off their phones. That is the idea. So when I actually start to build the technology around it, right? I'm starting up this dream, I'm building it into a reality, then that becomes a startup. So the SMEs or the smaller businesses have kind of been in the market longer. They've proved the concept, they've tested the waters, for example, if it's a tech company, you're past the prototype stage or whatever the tech people call it. If you're in the agri space, you've kind of gone past that phase of trying out the concept and you are now stable and trying to build now the business. So I would say it's up for debate depending on how you look at it. But generally, a startup is past ideation and going into the point where you're now building up your business. And then what they call the SMEs have probably been in existence for maybe more than a year or two. They have a proven concept. They've created a market. They've started creating markets for themselves, and they are now looking at growth. Right. So if you ask me, Kenneth, that's what I would think the difference is.
Thank you very much, Brenda. As you indeed said or mentioned, it is an arguable conversation that everyone struggles with. However, I want to also mention that a team of experts has been or have been sitting for the last 3 years trying to define what a startup is or what it could be. And this is what they are saying. Just to add on to what Brenda has said, it says that a startup is a young or early stage business that applies technology or innovation to build a scalable or disruptive solution um, that is capable of um, getting market ready. But during that time, they also mentioned that it is able to at least spend some money in research and development, spend some money in or have a temporary management structure. Because at the end of the day, when you are getting an investor's money as a startup, they need to be sure that you can actually manage that money. And also, there is also an argument that at least you must be 1 year old in operation. You know how hard it is to actually get very well structured with your team, with with the business structures themselves. So that is what is being looked at for a startup. At least you should be able to commercialize. Someone should be able to pay for your service or for your product, and then there you should certainly qualify to be a startup. Note that there is an element of using or applying technology somewhere whether you are a brick and mortar or whichever business, for as long as you are going to apply technology somewhere, so that you are able to be scalable, you are able to disrupt, as Brenda was mentioning, then that, for the most part, will make you a startup. And that is going to be maybe in the next to come startup policy if it is passed. Yeah, Israel, you have a question. Kindly unmute and speak to us.
Yeah, thank you very much. I think I'm Tembo Israel, the Chief Executive Officer for Kiaka Refugee-Led Organization Network. At the same time, the team lead at Kiaka Climate Resilient Hub. Executive Director for Tembo Multi-Action and Metalworks. I think for other positions, I can hold them for now. But my best question is, with the startups, we all know that we have difficulties, especially in making sure that there is due diligence in terms of documentation and having all that is required. So the question was, how do we build, how better do we build our relationship with donors or prospect donors, especially when we don't know before we even understand their point of interest? Because now we are having an online access of different platforms, but it calls for you to first to take time to understand someone's interest before even you engage this person in the discussion of your business. You will tell them what you are doing, but you don't know exactly their interests. How do you build the rapport as startups to make sure that we maintain the connection and we maintain the prospect donors that we come across with? Thank you.
Thank you very much, Tembo. And I think the question was also summarized in the chat room. How do you build up rapport
Yes.
to new prospect potential donors before you understand their interest better? Over to you, Brenda.
Yeah, thank you so much, Tembo. I think that's a very important question. It's actually something that I was going to speak about in the challenges that startups or businesses face as they raise capital. So trying to create rapport and with donors or investors, quote unquote, really starts with how prepared you are as a business. You mentioned issues around documentation, right? Sometimes you are looking to grow your business, but for example, there are simple things that will make a donor or a funder, will use the term funder to cover whether it's a donor, a bank, or everyone else. There are certain things that they are looking at. One, are you a registered business, first of all? Right? Are you registered? Are you filing your returns? Do you have financials? Do you have records? Right? I spoke about records earlier. So that documentation part can be a bit time consuming for business people, because then you're thinking, okay, that's wasting my time because I need to be running a business. And in all fairness, but at the end of the day, you need to have some of these documents on file, because then they validate who you are as a business person. They validate your authenticity. They give me some level of trust to even start a conversation with you. There is what we call a data room, right? A data room is basically, it can be a Google Drive or, a folder that you have that has all your legal documents, that has all your financial data, that has for example, things around your strategy document. So you have all these things together. It's tasking initially, but when you start keeping records as a startup or as a business, eventually you build to that level where you have all this documentation, because now we've seen a change. Before, donors would give grants, without doing so much due diligence. But what we are seeing now is that donors are doing as much due diligence as investors, because again, most of in the past, donors have been burnt before. People have taken grants, they've not executed on the things the money is supposed to be used for. So then now they are more diligent, right? They are doing as much due diligence. They want to know what kind of business you are. They want to know how has your financial performance been? They want to know what solution are you putting in the market? If I support you, for example, to buy this machinery, how is it going to add on to your business? So Tembo, to your response, it's about you being prepared and being able to speak through your business confidently because you understand it, and you cannot understand your business if you don't take time to step back and look at how everything works within your business, understand how the finances are, understand what the market what the market is, understand the product in totality and what value it has. The other thing is about you owning your business, because a donor or a funder does not understand your business more than you do, right? You have to sell your business to them. So if you've been given an opportunity to talk, for example, to a funder, if a funder walked to you right now, are you able to clearly tell them about your business in like 5-10 minutes? Are you able to interest them in picking up the phone tomorrow to call you and say, I have a grant for you, I think I can support you to procure this, I can support you in this way, I can support the market, with market access. So preparedness in terms of documentation, preparedness in terms of how you sell the business as a person. They say every entrepreneur is a salesperson. So then have you crafted your skill, right? The other thing is also around relations, and it's something that, like I said, when you're starting up, it's a bit expensive, but then if eventually you hire, for example, transaction advisors or business advisors that can advise you or guide you on some of the areas that you may struggle with as a business person. So then when you understand those things, even when a funder comes to you and it's something that I'll speak about in the challenges, and then you see that you don't align, right? Because sometimes a funder may want you started your business to supply, for example, hose to farmers in a certain region. Then the funder comes and says, no, I want you to focus on women. So then there is a misalignment, because at the end of the day, that is not what you're actually looking for. That's not why you started your business. So in understanding your business better, it enables you to relate to the donor better. In valuing your business better, it means that then you can relate to the funder in a better way, because then you have a clear understanding of what you do and you can prove it because you have the documentation for it. I hope that answers.
Okay, thank you very much, Brenda. There is a next question, and this actually came in earlier. How are angel investors different from crowd investors?
Okay, so angel investors are really, like the name suggests, angels, because they are individuals who decide that they are going to invest in a particular business. But also angel investors can eventually become crowd investors. So crowding investment is really saying, and this is very common. It's not so common in our parts of the world, but it can be done with information. In the other more developed countries, it's really saying, you know what, guys, I have an idea. I have an idea. I'll stick with the example I used earlier for funders. Sorry, I have an idea to create a solution that will help parents seamlessly pay school fees for their children. And this is the business proposal. This is going to be the financial impact of this particular product. I'll need maybe $50,000 to create this solution. But right now I have $20,000. Who would like to be a part of this? right? So then people then crowd in the money. They can crowd it in either for shares. For example, someone says we are crowding in money to get shares within your company, or they are just crowding it in as a vehicle. So an angel investor is more of an individual and saying, okay, I'm going to invest in, for example, Tembo's business because I've liked it. So I'm going to invest in it. I'm either giving him debt or I'm going to give him this much money for equity, for shares in his business. But also angel investors can be part of a crowdfunding initiative. We've seen so many, for example, we have the Kampala Angel Investor Network. It's not as active. For example, if you look at the Nairobi Angel Investor Business Network, they are more active. So it's a group of angel investors, but sometimes they come together, crowding money and make an investment in for example, a business that they think is going to earn them a good return.
Okay, thank you very much, Brenda. I know someone else is asking kindly more light on bronze, gold, platinum partnership. I think I will request Eric later after the call or after the presentation to briefly to redo the presentation about startup funding vehicles and our bi-monthly investor knowledge and learning webinar series. Yeah, so Brenda, you can, I think, continue with your presentation. Those are the questions so far we had.
Hey, thank you. Thank you so much. I think the other part that the second part of our evening is going to cover the challenges. So now we know what investors want, right? So what are challenges that businesses face in accessing capital? Why aren't you able to just, get an investor to invest in your business? And there are so many reasons, but I'm going to break it down for it to be a bit more clear. I'm going to break it down into the macro reason, that is things with the market and Uganda as a whole, and then the micro. So this will be more specific to the businesses. So Uganda in itself is perceived, and I'll use the word perceived because one investor may think it's a risk, another person may think it's just the best place for you to invest in. So Uganda, there are certain perceived risks to the country, and this perceived risk could be as a result of many things. One, it may be political. Two, it may be that they don't see potential in the economy, or maybe they are looking at certain policies in the country that they think presents a risk for them. Because if you remember earlier on, if you were following the discussion, we said investors are here for a return, whether it's financial or impact or whatever, but at the end of the day, they want to see a return. So if they see anything in the country that may affect their return, may limit, or may put a block on what they get back from, their investment, then they will kind of step back. So there is that perceived risk, and that is something that you cannot change as a business. Of course, then someone will say what is being done. And that is where things like, policymakers have to come in, the ministry, for example, finance, Ministry of Trade. Those are things that they'll need to focus on. How do they position Uganda as a hub for investors? Right? It's like how, if you look at countries like maybe Nigeria, South Africa, Kenya, or Egypt, the ones that, have higher numbers of, private capital investments, there are things that their governments are doing right, things that private sector is doing right, or, initiatives like this, like the startup funding vehicle can you lobby for certain things, for example? So there's that perceived risk about the country, and that is something that you cannot change, but we can work towards it. And then, of course, the other thing is I spoke about the product solution fit earlier, but also there is the investor investee fit, right? I am an investor, and my mandate is on gender and strictly gender, but the business or you as an entrepreneur, that is not your mandate, because for you, you want to make money. But the investor is telling you, I want to invest in your business, but I want you to work with 40,000 women. And we all know the issues around that in this country. So then you're thinking, how does that align with what I want to do? And also the investor is looking at you and saying, but you don't align. So there's an alignment issue. And sometimes that is not something that you can control as well, because as an entrepreneur, as a startup founder, you know what you want for your business. You know why you stayed up late in the night thinking about this concept. You know why you do a lot of running around to get this concept moving. So if an investor is coming to try and change how you are running your business, then there is that fit that will not work out. The other thing is we have limited investment options. We have very limited local investors, right? Most of the investors we see, the private capital investors we have in the market, are regional or foreign investors who may not have a clear understanding or may not appreciate our culture, appreciate the solutions that we have in the market. So if we had more local options, there would be a better understanding. So someone asked earlier about angel investors. We do not have that many angel investors. How then can we get these people to play into the space, right? So the high net worth individuals that we have, are they investing in businesses? Because out there you find most of these people are portioned a certain amount of their money to go to supporting businesses in areas that they like. If they are passionate about technology, they are putting money for that. If they are passionate about agriculture, about manufacturing. So how we don't have those local options. They are very, very limited. These days, people are beginning to think, for example, about circles and investment clubs. How can they be good options, right? But then you find in all this, the biggest problem we have is information. There's an information gap. We have all this money seated in banks for circles and investment clubs, but they are not informed about and I like that the next session that we are going to have with Mr. Riro. It's about how can investments in startups be looked at as an asset class, as an option for people to invest and get returns on. So there's that information gap. Even the high net worth individuals do not know that if you have extra money, this could be a long-term investment that can give you a return. And then also, the angel investors are also a bit cagey. So the pension fund. So we don't have a lot of local capital, that really understands our businesses. And this is a privilege that the other countries that are performing better in the private capital space have. So that is something that is really out of our control, but it's something that conversations like this can start, or institutions like the Startup Funding Hub can start working towards, right? The other thing is that I would like to speak about in that area is the exit market. We have a very small exit market, because if I've invested in your business for 5 years and I want to pull out my investment after 5 years, what happens? Are we listing on the stock exchange? Is there another person willing to buy, or to put in money into this business? So some of those issues limit investor interest in the country. But is there something that can be done? Yes, but it has to be done at a micro level, at a policy level, with government, development banks, organizations like the one that I work for, organizations like the startup funding vehicle, so that we kind of start creating an environment that is suitable for local investment, or one environment that would attract foreign investors into the country. But also there are issues around biases, right? There are issues around biases. If you look at some of these investments, they are with people that they've networked with. I mean, if I went to school with a guy from Harvard, for example, and he's starting up something, I know him. I'm like, okay, he's gone to Harvard. I trust that he knows how to handle money. It's a bias. Then I'll come to you and say, me, I didn't go to to university. I stopped at this level, but I have a solution because at the end of the day, I know what the people want. I understand the market better. But the bias is that the investor will tend to go with the blue-collared person, right? And yet you, the actual Ugandan, you understand this business in totality. You understand the market. At Baganda, say Oliku ground. So Oliku ground, you understand everything, but there's a bias against you because we've not rubbed shoulders in the streets of New York, because we've not rubbed shoulders at a summit in South Africa or in Nairobi. So those biases also we see more and more that they affect how investors look at our country or our businesses and how they interact with businesses at that level. So you find there are potentials, but they are not going to think twice about them because they've already created this bias about you based on your culture, right? Based on your beliefs, based on your education status. So those are some of the challenges that we see in the market. The other one that I think is also worth mentioning beyond the limited options is, of course, I talked about the cultural, we already talked about the cultural biases as well. And this in particular goes to, for example, things around gender, right? We have a lot to do as a country to kind of push the gender agenda, but then when you're coming in as an investor and you're demanding that I have 3 women, for example, and this is playing devil's advocate, you're demanding that I have a woman on my management team. That is not my focus. I have nothing against women, for example, but I'm starting the business and the one that I think that can help me grow my business is a man. So then you're not going to invest in my business because of that. So there are all those biases that at a macro level that you see, and it's beyond what you as a business person can do. So now what are the challenges that we see that business people have? Of course, generally it's things around investment readiness. They are not investment ready. What do I mean by investment readiness? So you are deemed by that not to be to have challenges, structure challenges within your business. And this could vary in many forms. One, it could be your governance structure. 2, it could be that your business model does not make sense. 3, it could be like you don't have the systems your systems are not aligned. 4, there is the issue of key man risk. And that is it's a very debatable thing because most businesses in Uganda, for example, are family-owned business. Me, as a mom, I decide I'm starting my business. In all fairness, it is my business. You can't come as an investor and say, now, I need you, Amon, to step aside, and then let me have Kenneth run the business. It's a very difficult and bitter conversation to have because I started my business with a vision and a dream, but because I'm getting money from an investor, they think that I am not the person to achieve that dream. So you find there's that friction and bitterness that most founders or startup owners have, because at the end of the day, you're taking away something that I spent sleepless nights trying to build, something that I started with a lot of sweat and got my hands burnt. But because I need $50,000 from you, you think when you give me that $50,000, then I can't run the business. Of course, sometimes, the argument is, would you rather be a part of a small thing, or would you rather give up, for example, your shares or equity to be part of a bigger thing? But that comes with a lot of considerations. So there's that key man risk and the issues that we have around family-owned businesses not being open to change. And it's much as it's fair, but also a lot can be done. Conversations need to be had. You need to be able to realize that as a business, it's not a must that I have to hire my wife to be the secretary. If she's rude and she's sending away all my customers and partners, then maybe I need to get a professional administrator, right? My son, who studied in Makerere, does not have to be the finance person if they know nothing about finance and are not interested. Or my uncle's son does not have to be the operations manager because I'm doing my uncle a favor. So those are discussions that startups need to have, because all those things kind of put you in a certain light that is not attractive to investors. Of course, the other issue that is very key and that we see a lot in the market is grant dependency. We see that so many businesses depend on grants, right? You've taken donor funding, you've used grants all your life. So you get to a point where you do not know how to take credit, because when they give you credit or when I invest in your business, I expect you to pay me back. Right. So you find that even investors or funders are shying away from businesses that are grant dependent. I believe even in the banking system, sector, they are beginning to see this because you're depending so much on the grants that, and I'm not saying grants are bad. Actually, at a certain point when you're ideating and starting up, sometimes the best funding option for you is a grant because a grant gives you less pressure, it's targeted, and then it takes you to the next level. But when you get to that next level, do you stay collecting grants or do you now say, okay, now I'm ready to start collecting credit? Because when you actually take credit and you keep your records, even you as a business, it's a test for whether your business can stand. It's a test on your cash flow. It's a test on whether you're able to even pay back. You have a credit history. But if you've only been receiving grants, then I'm not sure if the grants are taken away from you and as a business you're left naked without the grant, will you survive? So an investor is thinking, okay, if I give this person who has been grant dependent for 5 years, if the grants now, for example, with the USAID cuts we are seeing, so if there are no grants anymore, are you going to survive as a business? So there's that issue of grant dependency. And then, of course, there are issues around collateral because some investors are going to ask for collateral. But remember, you're starting up, you may not have all the assets that you need. So they are really sometimes you struggle and say, okay, but I'm just starting up. But then there are issues around collateral because some of these investors, like I said, they're there for a return. So they need to know that you have collateral that they can call on if you fail to pay them back or if the investment goes bust. The other thing that I spoke about earlier on is the information gap. The information gap is very glaring, and that is part of why, for example, the deal flow facility was set up, because we come in the middle to bridge the gap between the investors and the entrepreneurs. So there are so many entrepreneurs doing amazing things, but they are not aware of the opportunities that are out there. There are so many investors that are willing to pump money into the economy, but they don't know where to start from. They don't know who the businesses are. They don't know where to go to. So there's that information gap. And also, what are the options that you have as an entrepreneur? Okay, finally, you've been matched to an investor, and an investor is giving you a very interesting terms. Are you aware? Do you know your rights as an entrepreneur? Can you interpret a term sheet, for example? Do you know the difference between equity and debt? Do you know what the repercussions of, for example, handing over certain shares of your company to the investor? Do you understand what impact that has on your business, or how it affects you as a founder? What is your control in the business? So there's a lot of information gap. But like when we started out, we said there's a lot being done in the market. I think it was Tembo earlier on who mentioned something about not knowing what it is that the investor interests are. But now there are so many accelerators in the market. So you find, if you need information, you should be able to approach, for example, our hosts. They should be able to guide you. There are so many accelerators right now that are supporting startups, but do the businesses know them? Do they know where to find them? And that is why sessions like this are very important and excite me, because it's opportunity for us to put out this information. It's opportunity for you to learn something and share with your fellow business person. Are we disseminating enough information out there for people to know that, you can get, funding on the alternative side, or there is this organization that is supporting entrepreneurs with, with documentation. They're helping them put up their documentation. Or there is a firm that can provide pro bono legal services for you as you do your registration. Or there is this individual who is willing to hold your hand and walk the journey with you as you fundraise. So there's that information gap that is still very glaring. And as ecosystem players, it's such sessions that I feel will help us close some of those gaps. The other thing that I feel limits us basically is of course, and I don't even know how to say it, but sometimes the products and solutions that we have out there are just basic. So as an entrepreneur, like I mentioned, there are some investors who are interested in very exciting solutions, right? So then how safe are you? Of course, there are those investors that would be excited, but also the majority will be like, maybe not. And the other thing that is also limiting capital inflow is the we all know that bad news travels faster than good news. Like you can do 1,000 good things and then you'll do this one bad thing, and that's the one everyone rides on. So we've had a few bad loans in the market. We've had a few businesses that have failed to pay back investors. So this kind of also creates that perception in their minds. It creates that bias. And yet there are so many businesses that have taken capital, they've absorbed it, they've used it for the right reasons, and they've even come back to the market to raise more money. But that perception that, oh my goodness, there's this, we heard about this business, right? So Ugandans are not paying back. So as entrepreneurs also, you can help yourselves and be good credit people, right? So that bias is taken away from us as a country, and then we are looked at in a different light. So if you ask me, I would say those are some of the reasons, those are some of the challenges that I see. But also there are a lot that can be done at a macro level. We could see more. It would be nice to see private sector, to see the ministries or government coming in to bridge that information gap, right? So to sensitize businesses around the opportunities that are available, to also put Uganda out there as an investment hub, so that people know that, you know what, or even provide guarantees or de-risking facilities to say, you know what, if you invest in our businesses, for example, if you will give them 20% and then you give them the 80%. So how are we de-risking that perceived risk that they have about Ugandan businesses? So if you ask me, those are the challenges that I think, but I look forward to hearing from you on what you think some of those other challenges are, and then we can have a quick discussion before we close the session.
Thank you very much. Thank you very, very much, Brenda. And to our participants, thank you very much for the consistency. We only have 11 minutes to close this webinar. And before I continue, I want to notify you that these sessions are proudly brought to you by Tech Buzz Hub in partnership with startup funding vehicles in partnership with Tech Buzz Hub and Uganda Management Institute, and of course in collaboration with Brenda's company, the Deal Flow facility, and private under sorry I under what under the financial sector deepening Uganda. But also I want to mention that these are bi-monthly webinars. So every month we shall be having 2 webinars, and everyone who will consistently attend 80% of the first 10 webinars will receive a certificate, which certificate, of course, can be used for when you are trying to find work with any potential investment firms that are in the country or that will be coming up, but also when you're trying to invest in a startup, they want to be sure that someone they are working with is actually aware of the opportunities that are available within startups. Yeah, so thank you very much again, Brenda. If there is anyone that has a question, we are glad to have that one, but we noticed one question that came up, Brenda, and that question was maybe if you can share your thought on it. It was asking, they have always wanted to learn more about Ugandan capital markets. How does it work with Ugandan startups? Do you have an idea? Do they work with startups? Maybe you can briefly tell us about it. And I know someone asked about tier or tier-based approach with startup funding vehicles. Again, for those who came in a little later, you will I will request Eric just in the last 5 minutes to quickly go through the presentation of startup funding vehicles and what it is up to in making sure that Uganda is an active investment destination, and of course having making sure that Ugandans are also actively investing in fellow Ugandan businesses, Ugandan startups, and what have you. He will make that presentation. So Brenda, over to you on the question of whether capital markets are investing in startups.
Yeah, that's a very interesting question. So actually, capital markets is really interested in supporting, they are one of the founders, for example, for the deal flow facility. They are interested in seeing and supporting businesses in Uganda to access funding through the capital market. So, however, they've faced a couple of challenges, of course. Challenges around businesses actually, following. Okay, I think the biggest challenge is their requirements. Of course, businesses have said, they have very stringent requirements. Some of them are not actually informed. So that goes to the information gap that I spoke about earlier, that, some people are not informed about the options of, for example, listing in the stock exchange as a way of accessing capital. Someone talked about crowdfunding earlier on. So the capital markets is definitely interested in supporting businesses. They do work with businesses. We've interacted with some of the businesses that they support. So yes, they do work with them, and I know they can easily be accessed on their website, at their offices. So yes, capital markets definitely does support the startup ecosystem, and they are always looking for collaborations that will help them grow Uganda's capital market.
Okay, thank you very much, Brenda, for those insights. I know people are certainly wondering, Brenda, who is speaking, is from the deal flow facility, and they're wondering, what is your work looking like? That is actually a question that has come up in the chat. If you don't mind, maybe sharing what your business or your company does. Thank you.
Yeah, thank you so much for that question. So the deal flow facility is a technical assistance and matchmaking facility that supports growth stage companies in Uganda. Like I mentioned earlier, we are under financial sector deepening in Uganda, supported by Capital Markets Authority, but also funded by the EU. So what we do is we support businesses. First of all, the criteria, like I mentioned, growth stage, meaning we are looking at businesses that have been in existence for more than 3 years, 2 to 3 years. They are registered and operating in Uganda. They have a revenue of about $250,000 and are looking for funding of about $500,000 and above, $500,000 and above. And people will say, okay, why that criteria? This is because a study was done by the EU that found out that, like I mentioned earlier, there's a lot being done to support the startups. to get from ideation to actually running the business. But what happens after 2-3 years? We all know the statistic around businesses are failing after a certain period of time. So when they get to that level, what support then do we give them? So that is why, as the deal flow facility, the deal flow facility was put to support what they would call the missing middle. So we are supporting the businesses that are at a growth stage level and not at the startup phase, because there's, like I said, I believe a lot is being done. So we do support with investment readiness around the things that I spoke about earlier. We work with these businesses. Of course, they have to pay for some of this support, and then we match them with investors, and then we support them as they have their discussions with investors, because we have mandates around deal closure. And also we are sector agnostic, so we are looking to support businesses across all sectors.
All right. Thank you. Thank you very much, Brenda. Maybe if you may share your parting shots. I don't know whether those should work as parting shots, but you can have maybe a minute or 30 seconds to make your wrap up, and then maybe Eric can again take us through briefly what startup funding vehicles are, and the role it is going to be playing in the Investor Knowledge and Learning webinar series. Over to you, Brenda. Thank you.
Okay. Yeah, thank you so much. Thank you, Kenneth, and the team for this opportunity. For my parting shots, I would say that there is a lot being done in the market. You need to be able to seek this information online through networking opportunities and being a part of sessions like these, where you're able to network with each other and find out what kind of opportunities are there in the market. So as businesses, I would say keep doing what you do and be able to take up some of these opportunities because they exist, but also you should be able to open up your minds to change and pivot your businesses to, for example, if you're not registered, make sure you register, keep your records, keep your financial records, keep your sales records, think about, hiring the right team, think about skilling yourselves as entrepreneurs so that you're able to take your business to the next level. Thank you so much, and I wish you all a beautiful evening.
Thank you. Thank you. Thank you very much, Brenda. Eric, over to you.
Yes, please. I hope I'm audible.
Yes.
Once again, I would like to say that our main goal as startup funding vehicles is strengthening local investment networks. And we go to the next slide quickly. So we are an open ecosystem project, meaning everyone is open to join. And also our main aim is empowering local investors so that we support the homegrown startups. Go quick. So one of the biggest challenges, actually a biggest challenge of most startups is funding. And if your own people at home cannot even support you, invest in you, how can the external investors put money in you? So that's what we are trying to remove. Try to, just like a family, how can, if your father has a bad image on you, how could the outsiders want to work with you? So we're trying to strengthen the local investors network so that we reduce this gap. Go quickly next. So some big lessons from our fellow Africans. In Nigeria, 1.2 billion was invested locally. I mean by local investors into the startup networks. In Kenya, their startups contributed 8% of their GDP. So you can see how powerful our people are playing in this startup ecosystem. So you can, if we invest in much, we can also gain very much out of it. In South Africa, startups have helped in financial inclusion by 23%, as in people have been able now to, people getting digital market, digital money, not only digital, but just, how should I say, financial inclusion, as in everyone now is, I think let me just call it digital. Am I right if I said that?
Yeah, sure. Eric, you are right. So with
Banking, things
financial,
like banking,
okay,
mobile
yes,
money, something like that. Am I right?
yes, they have access to that.
All
And
that
by
is
the
courtesy
way,
of startups.
yeah, it increased from 33% to 57%. That is why we are just selecting the contribution of fintechs, and fintechs are from startups. This is only fintechs. Thank you.
Okay, please. So anyway, generally, what we're trying to say is that this is the effect. This is how much this if we handle this ecosystem very well, how much we can benefit out of it. Go to the next. So our vision board, we are aiming to have a robust investment culture within Uganda, investment knowledge and learning through our series that we are doing currently, educate investors on startup opportunities, engage stakeholders to enhance local funding, share insights and best practices, such as inviting extra experts like the one of today. Our milestones so far, we have done various research training activities, collaboration with UNCST. We have participated in very many key programs to do with the ecosystem and supported very many other ecosystem players. These are the photos of many things we have been doing so far. Could go to the next one. So what next? We are aiming at doing further land funding landscape studies, developing our investment networks, of course, in Uganda, startup investment support centers, diverse funding mechanisms, and also trying to make strategic collaborations. Anyone who is ready to collaborate with us, please reach out. And if you have any links to that would help us out too. We are going to keep on having more other series. So today was the first link you see, SFV webinar 1. So in 2 weeks, just simply change that to 2. That will be the link for the next event and keep on changing. Like every 2 weeks, we shall be having a webinar. And in case you want to join us, just use that link below, the last one, the bit.ly/funding vehicles. Choose the membership you wish to use to join us with, and you'll be part of our network. And so these are the memberships, the tiers. There's platinum. These are the events. Those are the events. So we have platinum, gold, silver, bronze, and ambassadors or partners. So for ambassadors or partners, it's open. Goodwill. Just want to, and also partnerships. We are always open to partnerships. Come and contact us, and we see what to do and how you could help us.
Eric, if I would also jump in on this one. So this is, as earlier mentioned, this is an open to the ecosystem initiative. It is not a profit-making initiative. However, it is definitely having a lot of programming around, of course, webinars, around research. The goal and the objective is to make sure that the ecosystem locally becomes vibrant, to start investing in startups, to start investing in locally grown businesses. And by doing that, of course, we are going to create more jobs. We are going to, of course, attract more money from external investors. As you all know, that USAID has gone out of the country, generally in the world. So it means that we need to start creating our own value. And the only way to do this is initiatives like these. And so we are looking for members who are interested in driving this conversation to indeed to the next level. And when you pay whichever package you choose, there are benefits and maybe roles you are supposed to do. For example, at a 200 one, that is platinum, you contribute to the SFV strategy and get to review our startup pipeline for future or for potential investment. This is, if you are a potential investor and you want to start doing investments in startups, maybe you might not be ready now, but in the next 10 sessions, I believe you'll be very well informed on who startups are and how you can spot a better startup to invest in your money, as opposed to investing it into an apartment that will return the money after 25 years. The gold one, of course, in startups, you can return it in 5, in 10, in 15 if you are really that. But of course, there is also a chance that it can get challenges, but we are going to learn all that as we go through the investor knowledge and learning webinar series. The goal, you access reports of SFV progress, whichever reports they are, you attend strategic meetings, maybe with potential partners and what have you. Then with silver, which is 100, you support recruitment of the network and get to access trainings. And then bronze is actively and in full operational activities. You are organizing events like this, getting, people who attend the events, and then ambassadors or partners. This is an open option. Maybe someone wants to give us $1 million. I am saying you could also be wanting to give us a $1. Who knows? But on top of that, you want to become the ambassador of the project, because we know if we together work towards creating a viable and proactive investment network in Uganda, then we are going to have a lot of money start flowing to Uganda. We are going to see a lot of startups come up and create jobs. If you did not know, by the way, every year Uganda creates only 17% of jobs in relation to the 100% of students that graduate from university, meaning that about 83% of students have nothing to do. So imagine if investors are investing in right businesses, right startups that are creating jobs, then we are also contributing. We are contributing socially in our job creation space, but also in the GDP or economically. You notice each of these tiers have branding. So whichever package you have, you get to have the different branding materials that over time startup funding vehicles will have. These could be t-shirts. We have t-shirts, by the way, if you noticed in the previous I just want to take you briefly. In here, you see we already have t-shirts, which are very beautiful, and we are looking forward to make sure that at least Uganda is one of the big 5. We know we only have big 4, that is Nigeria, Egypt, Kenya, and South Africa, the ones that Eric talked about. Those are the biggest destinations for startups, and where local investors are very, very proactive. We want to be we want to be on that number, and they start saying the big 5, and Uganda is there. Yes, over to you, Eric. Thank you. And I know there is someone who has a question. After Eric finishes, you can ask your question.
Thank you, Ken. So you could support us. There's no limit on how much you could give us, but those are just the tiers we have. We are open to anything you're ready to give, support the ecosystem. So otherwise, we are located at Tech Buzz Hub, Kayondo Road, just near the traffic lights. You will see a place, a building called
Najim Mall.
Najim Mall. Yes, please. Behind Najim Mall, just take that road that slopes down, the Najim Mall. Behind Najim Mall, you'll see a story building having Tech Buzz Hub above it. You're always welcome. Come by. Thank you very much.
Thank you very much, Eric. I see Israel has a question, but I also want to mention that we are time barred. We are 10 minutes late. We are supposed to finish at 7:30, but you can ask your question, Israel. Israel,
Thank you very much. Yes.
kindly, if you can summarize and we close the session, yes.
Okay. My biggest issue is maybe on member contribution, especially when it comes to the membership. Is this money paid in the bank? Maybe the company already have the legal document, like in the bank system, where people can pay the money in the bank? Because there is the issue of accountability and transparency. How is the committee, the steering committee, accountable for the members make sure that even when members are willing to give more than the 200, but the committee is accountable to make sure that the resources are utilized in a normal way or in a good way to make sure that the cause is moving forward. Then the other issue is about representation. Sometimes the company like this, the Tech Boost Hub, ideally, what need to be worked on is to make sure that if you are supporting startup or if we think startup need to be supported, in order people to see value in the Tech Boost Hub, the hub itself need to have resources, have funds. Maybe you apply from donors or from wherever, you have resources that you are able to give your funders to the members of the hub, so that other members see value that, okay, me being part of the member of the tech hub or the tech boost hub is going to add value to my business. One, maybe it is going to be advertised on the website of the, the hub, and maybe it is going to be connected to these numbers of funders. Is maybe what the benefits, like members need, they need to be tangible and smart. If you are going to have maybe visit for the members, help them, maybe they come to the office, they learn about making sure that there is due diligence in terms of documentation, because we are seeing people in the urban areas, maybe in Kampala, in other cities, who have access to internet, but the other people doing business locally, they don't know even the issues of writing and making record. How do we bring them on board and make sure that our hub is inclusive for
Okay.
all the region and all that? Thank you.
Okay. Thank you very much, Israel. In 1 minute, I'll respond to you, and maybe we can have the conversation thereafter via WhatsApp or a phone call. We want to close this meeting because it has gone long overdue. I want to say that the first question was about accountability. The one thing we were able to do in the last few months before we actually started webinars was to make sure that we have a registered name. As you might know, you cannot register a business account without a registered name. And even when that took us situations and challenges because URSB doesn't register funds, we successfully had a registration, and that process will go forward. And I appreciate the question because accountability is very critical and very, very important. And certainly that is what feeds into the second question on the kind of support that members can access, not just members, but also maybe potential businesses that members would want to invest in. We need to come back and say, okay, we are maybe also creating matching funds as startup funding vehicles to see how different startups can actually attract more funding. Yeah. And then regarding more support for, startups, we have very many other initiatives that are in plan, and we know that the future is very, very bright because, as Eric presented, we already have a lot of planned activities that we can do to become the champion, to become one of the leaders in the space. And sometimes when you become a leader, other people build behind your success or behind what you've started. So we want to see many more other companies start deploying capital, maybe start sourcing this capital from local people, from external people, from wherever, so that at the end of the day, startups can access some of these resources, which are the only easy resources to access for startups, since we do not easily access or find Colorado, find a transaction bank history to access bank loans and stuff like that. Otherwise, we can have the conversation offline. For the other members, thank you very much for attending today's session. I once again want to remind you that these webinars are brought to you by Startup Funding Vehicles. initiative under Tech Buzz Hub, but open to the entire ecosystem. Anyone can become a member of this project. We are in partnership with Uganda Management Institute. For those that know, that is a premier post-university or post-degree entity that offers post-university certifications and degrees. Otherwise, I want to also mention that for the consistent people who will attend the first 10 webinars, we receive a certificate of attendance, which can be helpful when you're trying to access a job in this space of funding and investment, but also maybe when you're going to invest in a startup, they will ask what experience you have in supporting startups, and such are the conversations that will be covered during that whole period, how you are able to be sure that your investment or someone's investment cannot go to the waste, how to be sure that the startup also is accountable, how to be sure that they are using the money for the right purposes, and the business or the startup will actually grow. Other than that, I want to again thank you for attending. The next session will be on the 28th, as earlier shown. Same time, same place. And yeah, see you next time. Thank you very much. Invite other friends. Even if you're not a member, you are free to invite other friends to attend, especially those you think are very interested in this conversation, whether to support us or whether to learn. Could be a welcome and a proactive option you can choose to do for us. Other than that, I wish you a very beautiful evening and a blessed weekend, and hoping to catch up in the next 2 weeks, same day, same time. See you then. Bye.
Have a great evening. Bye-bye.